Stocks see some green after 3 down sessions with broad-based gains. IT, Realty and metals lead the charge while healthcare lags.
Indigo Airlines parent Interglobe Aviation is facing rough weather over a rush of flight cancellations, which the airline blames on the weather, congestion and updated crew rostering rules. The airline hopes to normalize operations in 48 hours.
JSW Steel inducts Japan's JFE Steel as an equal partner in Bhushan Power and Steel to expand and grow the business. JFE's investments at enterprise value of 53,000 crores will help JSW Steel pay significant debt, getting a thumbs up from analysts.
The Biocon board is set to meet on December 6 to consider buying out shares of investors in its biologics arms. It also plans a fundraise which could help facilitate the buyout. The stock slips.
Hello and welcome to Halftime Report live from the CNBC TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Sonal Bhutra. Well, it's turning out to be a session where we're seeing some amount of reprieve, at least on the equity side in today's trading session. So after 3 days of losses, we are seeing some amount of green. Let's see whether that sustains at this point in time. Based on the rupee weakness that we are seeing, it could possibly be a little precarious. For the rupee, in fact, it's hit another record low today. 90.42 is what we've seen the rupee hit. So what does that mean in terms of equities? Possibly the 20-day moving average would be the key factor to watch out for at around 25,920. And separately, just a little bit of reprieve continues for the IT index, which is now one of the best performing indices on a week-to-date basis, up close to around 2.5+%. Lots of news to watch out for, Sonal. We have the Putin visit as well as the RBI policy, especially in light of the rupee depreciation, I think, is going to be extremely important in terms of commentary.
Absolutely. In fact, yesterday, the comments coming in from the chief economic advisor on rupee, where they did indicate that they are not losing sleep over rupee depreciation. So it'll be key to watch out for any commentary in the RBI policy as well. As Ekta pointed out, IT second day running, doing really well in trade today. It is a beneficiary of rupee depreciation. Plus, it has been an underperformer for a long time. The Midcap index, though, has come off sharply from the highs of the day. The advanced decline ratio, those lines, they're almost merging now. So watch out for that one, because that has been a laggard for a long time now. Look at that. The ratio at 1:1 currently. So whether that continues, where the mid-cap index sees some red on screen and the market breadth as well, that is something we'll be tracking closely. But let's talk about the broader markets then. We have Vivek with us to take us through the stocks that are moving around in trade. Vivek.
Well, thank you so much for that. It's been an extremely volatile trading session, and especially in the last half hour or so, we've seen the breadth considerably weaken. In terms of individual stocks, the ones that we're tracking, first on the list has to be Petronet LNG, an arrangement with ONGC over a 15-year period. The company has revenue visibility of close to 5,000 crore, something that the street clearly likes. The entire PSU banking basket, yesterday we saw a sharp sell-off. Today, a wee bit of a recovery across the entire space. The IT rally, something that we've seen ever since the rupee weakness has started, that continues today. Coforge higher by almost 2.5%. L&T Tech Services higher by over 4%. Hindustan Copper, clearly one of the outliers in today's market, up almost 5%. The top gainer as far as the NSE 500 index is concerned. And IndusInd Bank, on the back of various news reports, that particular stock amongst one of the top gainers as far as the F&O space is concerned. On the other hand, Biocon, you did see the news come about as far as Biocon is concerned in terms of both considering the merger of Biocon Biologics as well as the fundraise. Street clearly selling off ahead of that planned board meeting. Wockhardt Pharma, the stock has seen a one-way upward rally today, seeing a bit of profit booking. And lastly, Keynes, one of the top laggards as far as the F&O space is concerned, has seen considerable weakness, especially in the last 3 weeks or so. Today, volumes too are quite high.
Okay, all right, Vivek, thanks very much for that. So those are a lot of the buzzing stocks in today's trading session. Well, the equities might be volatile, but there's no stopping the primary market action. We have NephroPlus IPO, which opens for subscription on the 10th of December. The price band for this offering is around 438 to 460 rupees per share. It is an IPO, which is a combination of a fresh issue as well as an OFS. We have with us the NephroPlus founder and CMD, Vikram Vupula, and we also have the Chief Financial Officer, Prashant Goenka, joining in. Vikram as well as Prashant, thank you very much for taking the time out and talking to us. Well, NephroPlus, y'all run dialysis centers across India. Y'all also have international operations in the likes of Uzbekistan, Nepal, etc., and a total of over 500 odd dialysis clinics. Just give us a sense in terms of what y'all are probably going to do with the fresh issue of funds that y'all have, which is a part of the IPO. It's to the tune of around 350 odd crores. And how much are the promoters also selling via an OFS, and what is the reason behind that? Vikram.
Sure. Thanks so much, Ekta and Sonal, for having us. NephroPlus is not only India's largest dialysis network, it's also the Asia's largest network from a volume of treatments perspective. We run 519 clinics across 350 cities in 5 countries. And the whole IPO is consists of 353 crore of primary issue and about 14% of shares in OFS. Now, this 353 crore is split into capex investment of about 129 crore. It's about 135 crores of debt repayment and about 80 odd crores of general corporate expenses. Now, the company strategy is to continue to grow in India, for which the capex investment we are raising in primary issue. We'll continue to grow in Philippines, Uzbekistan, and also we are launching in Saudi Arabia. And that's the plan. Roughly 40% of the revenue comes from international business, and that will continue going forward as well.
Okay, take that point. Prashant, comment on this. Around 136 crore.
In terms of the promoter shareholding, the promoter has 79% stake before the OFS, and after OFS, it will come down to 69%.
Yes, that's exactly what I was going to follow up on.
The promoters are staying even after IPO in a very big quantum. The 10% OFS is done to get partial exit.
Okay. So, Prashant, when we talk about the debt repayment part as well, what is it currently? After repayment of debt, will you be completely debt-free? And expansion in terms of center addition, how many centers do you plan to add with the remaining money?
So, I can take that question. From a debt perspective, if you look at our cash and near cash instruments, we are net debt negative. So after from a gross debt perspective, roughly 200 crores gross debt is there. And after the IPO, we'll pretty much be a debt-free company, which puts us in a very strong position to invest in any new strategic initiatives and geography expansion activities.
Okay. All right. Well, Vikram, I just wanted to narrow down on the competition part of the dialysis market in India. Your cost per patient as per your RHP is around 2,531 rupees as of Q1. So just give us a sense in terms of how that compares with the other dialysis centers or hospitals in terms of a cost per patient. Is it higher? Is it lower? Is it the same? And why should one come to a NephroPlus when there are also public hospitals which are available, which do provide dialysis as well, charitable trusts, etc.?
Yeah, absolutely. From a price point perspective, if you look at our scale, we are doing more than 3.25 lakh treatments, Ekta, in India per month basis. And if you look because of that scale, it puts us in a very good lean cost structure, which helps us to create that margins and hence the ROCE perspective. If you look at large hospitals, they have dialysis centers, and many of these hospitals are partnered with NephroPlus as well, where we run the dialysis program inside their hospitals. But if you look at an individual hospital or a chain, they do not have the scale that is required in a dialysis network in order to generate margins and ROCE. So most of the corporate hospital chains in India also have partnered with NephroPlus, because in dialysis market, you need massive scale and you need 100% focus in order to create margins and create ROCEs. We were actually at the negative EBITDA for the first 11 years. And then we became PAT positive only 2 years ago. With that scale that we have achieved, now the operating leverage has kicked in, which is helping us generate very good corporate EBITDA. Corporate EBITDA for H1 of FY26 is 23%. Our ROCE profile for H1 of 26, annualized ROCE profile is roughly 24%. So if patients are looking for good clinical quality outcomes, good affordable access, then NephroPlus is the facility that they should visit.
Okay. Vikram, you mentioned how your margins have improved to levels of 22%. One of the reasons is operational leverage kicking in. Is it also because the captive clinic contribution has come off? If you can give a sense of what the margins look like in that particular segment, that has come from 60% to 30% now. And will this be the margin number that will continue for coming years as well? What are the growth levers from here on?
Yeah, we operate in these three core segments, Ekta. The one is the captive model with private hospitals, second is partnership with governments, and the third is outpatient standalone clinics. The margin profile for NephroPlus is roughly the same, regardless of which model you look at in India. Because of our scale, regardless of the price point at which you start, the end margin that we are making is roughly equivalent. The ROCE profile is roughly equivalent. So as NephroPlus, we are equipped to take advantage of increase in captive clinics, which is the core growth strategy for us. We are also equipped to take advantage of occasional partnerships with the governments. And we can also run standalones as the government and the state governments acknowledge standalone dialysis centers as a new model, which will happen over the next several years. From our perspective, we are agnostic to the model. We look at our scaled up platform in India, which is this 3.25 lakh treatments that I'm talking about on a monthly basis, which enables us to utilize the economies of scale and create similar good margins in all the models. So we are agnostic to the specific model per se.
Okay, all right. Quickly, Prashant, just before we let you go, just wanted an idea in terms of what the longer-term vision for NephroPlus would be. Would it just be dialysis centers, or would you probably look to diversify into different medical treatments as well? Maybe, something in oncology, which is basically chemotherapy, radiation, which is also just a day procedure. So anything on those thoughts which you can share with us?
As Vikram mentioned, NephroPlus is India and Asia's largest dialysis center. If you look at the global total addressable market, it's $80 billion. NephroPlus story has just about started. We have a big addressable market that we can capture in India and overseas. In India, only 9% of the dialysis patient who need dialysis today gets it. So there's a very big market that remains to be addressed. And same is the situation in many markets. So NephroPlus will remain very strongly focused on dialysis, and our strategy is to continue to consolidate our leadership position in India, grow in the international market where we have already opened Philippines, Uzbekistan, and open new geographies like Saudi.
Okay.
So to answer your question, we will remain focused on dialysis.
Take that point, Prashant and Vikram. Thank you so much for joining in today and explaining your business and most importantly, the reason for this fresh issue and offer for sale as well. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll connect with the management of Thyrocare. The company has launched a GLP-1 health check package, so we'll understand the implications of this.
Welcome back. Well, let's talk about the diagnostic space now. We have Thyrocare, which is in focus. The stock has been an outperformer this year, up around 43%. And the latest news on the company is that they've launched the latest in the GLP-1 space. They've launched a health check. We have it as Rahul Guha, who's the MD and CEO of API Holdings. He's also the MD and CEO of Thyrocare Technologies to discuss all this and more. Rahul, hi. Welcome to the show. So a lot of the diagnostic companies are now launching these GLP-1 testing packages. Just tell us, are you seeing as much traction as we are seeing for a couple of the drugs?
No, firstly, we were the first to launch the GLP-1. So Thyrocare is always known to be at the front runner. We were the first to launch fever packages. We were the first to launch GLP-1 packages and many other packages. And then we get copied very quickly. But I definitely believe there is a huge opportunity. You would have seen the Australian FDA giving a warning around these weight loss drugs. So it's very important to be safe as you take these drugs and ensure that you are losing weight in the right way, in a way that doesn't do long-term damage to your health. So I think right now there's a lot of euphoria about consuming the drug and losing weight, but it's very important to be safe, and people will start to pick up. But as you said, it's still early days. We launched the package literally, I think, almost 3 weeks ago. And we haven't fully started to promote it as yet. But I'm very confident as people get more and more on this drug and see the benefits of weight loss, they will also realize it's important to make sure you take a holistic approach on how your weight loss and ensure that you complement the medicine with good testing.
Okay, take that point. So still developing in terms of the financial impact and the demand that you'll see for this particular testing. But Rahul, the other update that came by is the change in labor laws, right? There's mandatory testing for everybody above 40 in any organization. What would that mean in terms of business for Thyrocare and the industry as well? Are you seeing incremental benefit coming in because of that?
It's too early. As you know, the law, it's still not notified as law. It's still going through the process. I think there'll be another 45 days before the consultative process concludes and then the final guidelines come out. I think it's the right step for the country as a whole. Everyone above the age of 40 should get tested from a preventive health point of view. And this is really an absolutely right step in towards managing healthcare, ensuring that we diagnose any long-term illnesses early and treat it before it goes out of control and the costs compound. So this is certainly the right step. I am sure most employers will adopt it, and then that will have a runoff benefit to diagnostic companies for sure.
Okay. All right, Rahul, now coming down to the business, Thyrocare holding, 61% of the promoter holding is pledged. What is the plan in terms of reducing this pledge?
We have already been doing a lot of work on the pledge front. As you know, at the promoter level, the debt outstanding is about 1,200 crores. So if you look at it, we are pledging far more than we need to pledge at this point. If you even take a normal loan against share cover, the coverage should be 2,500 crores of market cap, whereas we've pledged almost 5,000 crores at this point in time. We have just been abundantly cautious because, it sends a very poor signal if the pledge goes up, down during the course of the loan. But we are pledging, I think, far in excess of what we need to pledge at this point in time. We're just being cautious on that.
But then the plan on reduction?
That we've anyway been doing a lot of work on that front. As you know, earlier this year, we had, actually just a couple of months ago, we had placed 10% of Thyrocare to effectively pay down the loan and reduce the overall debt outstanding. We're not planning any further stake sale of Thyrocare at this point in time, but we're looking at other assets in the group which can be monetized to help pay down the loan.
Rahul, is there a timeline that maybe by this time 10% will be depledged, by this time 20%, and a timeline to completely depledge yourself?
We are targeting towards a March 27 of, basically the entire shareholding being unpledged. But I cannot commit to that at this point in time. But the internal plan is to ensure that we are at a rational, or we have rationalized the debt to a significant level where the pledge can be negligible by March of 27.
Okay. All right, Rahul. A lot to discuss, but run out of time. Thanks very much for joining in and speaking with us and giving us that quick take in terms of the GLP-1 testing, as well as the plans in terms of reducing the debt. March 27 is possibly when we could see a significant reduction in terms of the pledge, which is there on Thyrocare's books at around 61%. And separately, no further stake sale by promoters. Remember, they sold around 10% stake for over 660 odd crores in the month of October. We'll take a short break, but on the other side, we'll get talking about the F&O space. Stay tuned.
Welcome back. You're still tuned into Halftime Report. Well, there's some green on the screen today. So let's understand what the F&O trends are suggesting. Manglam is joining us now with more. Manglam?
Well, there is some green, but the market has actually come off the highs. And if you look at the Nifty Bank, that's the one that has taken a firm amount of knock, currently sitting with a mild cut. And that's the reason why the Nifty also is off its high. So that's something we will be monitoring. The other thing that we'll be monitoring is how the IT index pans out. Will the gain in the IT index offset the losses that we're seeing from Nifty Bank or not? The other part is Reliance. That's the top contributor on the way up on the Nifty. So which is why that stock is holding up. So with the IT index and Reliance holding up, the weakness in the Nifty Bank has been absorbed by the bulls. The India VIX, that's now below the 11 mark. So that's another thing which we're monitoring as we move along, because a far lower number below 11 means that the market is pricing in complacency. But that should not be the case right now. The Nifty, the India VIX is hovering around that 11 mark too. And the other part that we will continuously monitor to know where the market is going is the broader markets. Even as the Nifty is about 200 points away from its all-time high, previous all-time high, has recovered about 200 points from yesterday's low, there is some sort of indecision in the advanced decline. After having ballooned for the green line and the red line, now they've come closer and they are split right down the middle, an equal number of stocks advancing and declining. And that's where all the option writers are too. 26,000 put writers are fairly active, and the premium out there suggests that 25,950 or closer to the 20-day moving average on the Nifty, there is support. A large part of the up move was because the 25,950 call writers were caught on the wrong side, so they had started to unwind their positions. But as we pointed out yesterday as well, the 26,100 to 26,150 mark continues to see some sort of supply, and that exactly continues right now as well. So the 26,100 call comes up for you. That has a premium slightly shy of that 100 rupee mark. So around 26,150 to 26,200 is where the supply is on the Nifty. So the broad range that the street is working with right now is 25,950 is a strong support, and 26,150 to 26,200 is where some sort of supply is.
Okay. All right. Thanks very much for that, Manglam. We'll take a short break now. But on the other side, Manisha Gupta will join in. She will have Kushal Rastogi of Knight Fintech with her. Stay tuned for that conversation.
Welcome back. The Midcap index is up 140 points as we speak, but the market breadth is in favor of declines. But a couple of these chemical names, they have been doing well this week. For instance, Himadri Chemicals, that stock is up around 10% this week itself. That one is on our radar. We spoke about Hikal yesterday, another 2% higher on that one. Also, something like a Deepak Fertilizer is gaining in trade, 1.5% higher on that one. Petronet LNG, that stock is up by 4.5% on the back of their deal that they signed with ONGC with a gross revenue potential of around 5,000 crore rupees over the next 15 years. So some of these outliers in an otherwise weak market when it comes to the mid-cap breadth. But we'll keep tracking these market moves for you. When we come back, as promised, we'll get in Manisha Gupta with Kushal Rastogi of Knight Fintech. Stay tuned for that.
Welcome back. Well, for the markets, it's just about consolidating, but the Bank Nifty is now slipped into the red. So let's see whether it sustains or not in terms of the green that we're at least seeing on the screen at this point in time. The advanced decline ratio just about even keel. So we have around 2,000 stocks advancing to around 2,000 stocks declining. But Manisha, over to you on what you're tracking in the commodity space.
Ekta, thank you for that. Joining me as a guest, Kushal Rastogi is founder and CEO at Knight Fintech. Kushal, hi, thank you so much for joining in. Well, the latest data from RBI does show that when it comes to agri investments, especially in case of fintech, does seem to be on a rise right now. What would you say is driving this sharp increase that we've seen within the agri loan demand?
Hi, thank you so much for having me here. If you look at from an agri lending perspective, the agri has expanded to about 31 lakh crores is expected to hit in FY26. The reason what we say is like there is an overall framework from the government, the reforms, which are also promoting and incentivizing the banks. For example, is specifically maintaining priority sector lending for at about 40%. Out of which 18% is geared towards the agriculture lending. So that becomes like a big push from the government itself to motivate and incentivize the commercial banks to promote the agriculture lending. At the same time, in my opinion, if we see, it's also about encouraging the farmers in terms of moving towards a formal credit than an informal credit, right? So, for example, reforms like ACC, which has been picking up quite well and now probably hitting about 9 lakh crores, right? So which is again like kind of a big incentive from the government towards the farmers to adopt something like into the formal credit for rates as low as 7%. So I think both the government is pushing both the farmers, the borrowers, as well as the institutions to basically work together. I think that is probably one of the key reasons for as we see as the spike into the lending. Apart from that, if I have to add, the overall the monsoon season has been well in the last few years, and that has also been helping into the increased demand for the farm loans. Yeah.
Kushal, and are we looking at pan India, or do you think this is still some geographies that the markets are concentrated in? So if you see from a farm loan perspective, obviously there will be the distribution across the geography. If you look at some of the northern region, so they have been doing pretty well. You have quite wealthy farmers into the northern sector. But yes, and if you look at some of the Maharashtra alone, if you see that some sectors the farmer has been doing very well, and for some of the sectors the farmers are not doing so well. So yes, there is a distribution which is a function of the geography, what kind of land is there, what kind of crop can be grown there, and accordingly the buying pattern is also gets reflected into that. What are the specific types of which geographies the farmers are looking for, what kind of loans, right? Whether it's more into the crop loans, whether it's more into the equipment loans, etc. Kushal, also, how would you look at farmer level credit access get better? Do you think technology or AI, or does it have to be more technology driven in that sense?
No, yeah, definitely. I think the overall, if we look at the India stack, especially the new things which so the agri stack which is being brought by the government, right? So I think there are pretty interesting steps being taken in terms of formalizing of the land records, formalizing of the farmer identity, and having the digitization process. So overall technology, including AI, right? So whether the use cases are in terms of digitization of the records, identifying the fraud checks, use case into the credit underwriting, use case into the early warning signals, in identifying that what could be the patterns where which could give them early signals for the lenders to pick the certain patterns that can indicate that the farmer could get into the delinquent. That also helps the lenders themselves in terms of reducing their operational cost and the credit cost by leveraging the technology and having the digital processes end to end, and at the same time identifying the early delinquencies. Yeah.
Kushal, Manisha, thank you so much for joining in today and taking us through that discussion. That's all the update that we have from the commodity space. For now, we'll get into another break. When we come back, we'll focus on Biocon. That stock is under pressure ahead of the board meet they have on December 6th. We'll discuss the reasons and a lot more. Stay tuned.
Welcome back. Well, let's focus on one stock, Biocon, which is under pressure ahead of its board meet on the 6th of December, Saturday, where the company will be considering investment in Biocon Biologics via purchase or acquisition. And also, they will be considering fundraising. We have with us Vishal Manchanda, who's a pharma analyst at Systematics Group, joining in. Vishal, thank you very much for taking the time out. Just give us a sense in terms of what the street can possibly expect on Saturday from the Biocon board meet.
So I think essentially the meet is regarding a fundraise that they are planning and infuse. So basically the fundraise is probably meant to infuse fund into the biologic business. So as we know, the biologic business is a high growth business. And if we look at the current debt to EBITDA ratios of Biocon Biologics, they probably need a fundraise at this juncture. While this is a second fundraise coming too soon, they had a previous fundraise only some time back. So I think it's primarily to kind of reduce the debt to EBITDA, improve the debt EBITDA ratios for the company, and probably also to clean up the capital structure.
Okay, but why is the stock under pressure ahead of that board meet? It's down 5% today.
I think this one is like coming too soon. Maybe we had a fundraise earlier this year, and this is another one announced too soon. So obviously, it's going to dilute the existing shareholders. And so I think we'll have to wait and see how the growth opportunity pans out. But for sure, this is going to be dilutive immediately.
Okay. Just give us a sense in terms of, the debt on Biocon's books, and what do you think will possibly be a strategy in terms of reducing it? It's around $1.2 billion. So is that going to be the key focus for this board meet?
So right, about 1.2 billion is the plain vanilla debt on the books right now. And with this fundraise, obviously the ratios would get better. Their equity would improve, and hence they'll be in a better position to chase growth going forward. Because as we know, biologics is a very high growth business, and they'll need to kind of invest a lot in capex. And so I think this fundraise is essential for them.
But the perception, according to you, now, Vishal, what would it be, considering that there's been a string of fundraising which the company has gone through? QIP was 4,500 crores in the month of June, but before that as well, since 2022, they have been consistently selling stake in Syngene in order to raise funds. So on a perception basis, what do you think investors are concerned about at this point in time?
I think it's all triggered by the Viatris buyout, which was a hefty one. About $3.3 billion is what they had paid, and that led to the entire debt on the books. So probably that's where everything has been triggered. I'm not sure whether that was required, the Viatris buyout, but that's what it is. You kind of have taken that decision to own the front end, and now probably. So I think it will take time for Biocon to kind of normalize its balance sheet and kind of build from there.
Okay. Do you think that the opportunities, or maybe there is some amount of price pressure which is taking place in the biologics segment, which is possibly not allowing as much growth as anticipated for that particular segment?
So I think the competition has led to a lot of pricing pressure in the category. Earlier it was anticipated, so not earlier. So when I say when we all were thinking about the biologic business in the US, we were kind of assuming it's going to be a high ROI business. Probably it has not panned out that way. It has not been a very high ROI business for the entrants. It's also because a lot of innovators in the US are not losing market share to biosimilars. They continue to retain a lot of market share. They kind of are also competing with biosimilars on pricing. So they are kind of ready to go as low as biosimilars in terms of the prices that biosimilars are offering. So I think the situation is not that great on the biosimilar market, but as it expands, number of biosimilars that lose patent protection. As the market expands, probably there'll be room for everyone to kind of make money. So we'll have more patent expiries in the next 5 to 7 years.
Okay, so more patent expiries in the next 5 to 7 years is what we could expect. But, we do have the entire GLP-1 space, which they are looking at. I think they're looking to enter the entire space with regards to Mounjaro generic, etc., or tirzepatide by 2029. And before that is liraglutide is the other drug that they're selling in the UK right now. Do you think that portfolio is going to be a game changer in terms of revenues for a company such as Biocon, which has such a strong portfolio of diabetes drugs in any case?
So specifically on this, on the semaglutide, liraglutide opportunity, I think one thing that we are observing is, we have seen liraglutide opportunity having opened up in the US. There are 4 generics. But if you notice, the innovator continues to hold a lot of share. So along with the authorized generic, when I last saw the market share, they were close to 60% market share. And despite 4 generics on the market, they had minority share. While if you look at normal cases, usually the innovator kind of almost loses all the market share to the generic competitors. So we'll have to wait and watch out this trend, whether the innovator is giving up share to generics, whether they are whether they are also cutting prices at par with generic drugs. So we'll have to see how the innovator kind of takes the call here, whether they want to compete with generics or not.
Okay, all right, Vishal, we're going to leave it on that note. Thanks very much for joining in and speaking to us. So that is the word coming in from Vishal Manchanda of Systematics Group on Biocon, that stock under pressure at this point in time. Well, for the markets as well, it is giving up gains, so just about flattened out as we speak. We have the Nifty, which is just about holding 26,000. It's a wrap on Halftime Report. Business Lunch will take all the action forward. Stay tuned.